Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
All right, welcome everybody. We've got our first version of the copper trade with our special guest, Aldo Jordan. How you doing today, Aldo?
I'm doing well, man. Just coming out of a day off on Friday, feeling pretty good.
I love it. I love it. I was excited. You sent Nick and I the link to an email the other day. It's something you had posted on LinkedIn, and you said, "Hey, just for your guys' insight, look at this." And it was information on the spreads and what was going on in the copper market. And Nick and I have been talking about doing this trade podcast, and we do it with Chad Ellerbach once a month, and we talk about the ferrous trade. But sometimes what gets lost on the guys like the small, medium-sized businesses like ourselves is, who don't trade per se every single day, or we don't have somebody dedicated to trading, is just the nuances of the market. And so specifically copper right now, it's wild out there, man. So give us a little breakdown. What are you seeing, Aldo?
Well, it definitely has been pretty fun to watch the markets, if anything. Quite frankly, I think we're at this intersection of some of these really market fundamentals changing, and these are big topics, of course, like tariffs and trade and China and demand. But I also see this convergence of, in my personal opinion, I think that the COMEX as an index is starting to drift more and more away from true demand and supply fundamentals for people who actually consume copper. I think that that's just a function of who is participating on the trading itself and what their purpose is. So, this 2025 will probably be one for the records. And in some cases good, in some cases bad. But if anything, just the nuances of the market. I don't post frequently on LinkedIn. I probably should do it a little bit more often. But
so real quick, when you say the nuances of the market or the set 2025 for the one for the record books, are you referring to the spreads? Are you referring to the volatility? Are you referring to all the above? What is going to make 2025 so different or so interesting in relative to past years, just to give it the audience a
that's
background?
a great question. So one is the fundamentals of this demand and supply, right? The whole thing with China and how much they can consume is still literally a question mark today. That has created this drift between West Coast and East Coast market because, as you know, as West Coast, we tend to be more of an exporter of copper business more than a domestic consumption of copper business. That is the opposite on the East Coast, of course, to a certain extent, although we still trade on the export market. But both in the volatility and just on the fundamentals of the market, volatility alone, to my point on the spreads, I mean, number one, copper spreads has hit a record high for April, 14% of the index. I always like to look at it as a percentage because percentage tends to kind of equal all the highs and lows.
Yeah, that's a good way to look at it. It makes sense.
Yeah, I like that personally because it just kind of helps you equate that. But just to give you an idea, I just pulled some numbers here, before we got into this call. In April alone, we have had 14 trading days so far. And the high and low between those 14 days have been 63, 43 on the under, 20 on the positive. Okay. So if you think about it, that's almost 14% of the market. That can mean for a person who is trading at any given day a load of copper, that can mean a negative of $20,000 to a positive of $10,000. Now, I cannot tell you, guys who are holding on to 5 loads, 10 loads, the repercussions of that math gets pretty daunting very, very soon.
Yeah.
And as of market fundamentals, at least looking back to 23, 24, 25 is truly unique on what we have seen so far.
Okay. So it's just from a volatility and like a spread, on a percentage spread basis is what you're saying. it's the, it's kind of a wild one for the record books.
Well, we
And
saw
what does that number traditionally look like, Aldo? If it goes, if it's 14% right now, is it more of like a 9 or a 10 usually, or less?
But 22 and 23 and 24, that percentage point used to be 4%.
Oh,
Okay.
wow.
Oh wow.
Yeah. So when you think about it, that 14% for the month, that's 3.5 times that, right? So when people said, we're off the charts on volatility, well, it is truly off the charts, right?
Yeah.
Anytime you're going to be 3.5 times X out of what you normally expect, that means that the market fundamentals are nowhere to be found there, because you're used to be on a range of 4%, 23 and 24.
Mm.
And just to give it some perspective on, the guys at the yards buying the scrap like we're doing, that's where Brett gave me a call, like, hey, don't just use your traditional COMEX that we've been doing. We've been working off different formulas off that for years, because that spread was widening, and that's just something that if you don't have that communication between like a buyer and seller within your own organization, you could be out there making a lot of deals and you're really just losing your ass because that
Oh,
spread. And it's been, I mean, we saw the COMEX go down, $1 basically in 4 days.
yeah.
And
Yeah.
that's just crazy. Like I don't know if I've remembered the last time I saw it go down that far that quick. Uh,
And although our goal with this podcast really is to give as much, value and as much, insight into the small and medium sized traders, right? The guys that are just spending, a few, an hour a day or 2 hours, a small percentage of their time doing the actual trade, and then the larger percent of their time running their business operationally or whatever one of the other functions within the business. It's mostly the owners that are handling the trade. Not always, but for the most part, that seems to be kind of par for the course for the small, medium-sized operations, at least on the sell side. And then you have guys like Nick in our company who's handling the more of the buy side of it. So what can a person expect in today's, and you don't have to give away any trade secrets or anything, but so what can a person expect on a number one, a number two copper spread today? What should we be looking at? Say I think it was like a 472 COMEX roughly, with a 478 July COMEX today. This is obviously April 21st. What are you seeing out in the market? Just so guys are kind of know whether they're getting treated right, or, getting screwed, or what?
Well, it's a very difficult question today, and I'll give you some ranges, but here's the issue with that, right?
Okay.
Think about when the market is somewhat illiquid, what is the price, right? So because we're seeing domestic consumption. If they take a sale, they'll tell you that they can take it in June, and they might only take a certain amount of loads from what they were able to historically give you. China has disappeared out of the West Coast. Korea has always been an LME based buyer. And that spread is what today, if you can get a sale. So fundamentally speaking, right? If there is no liquidity in the market, what's the price of a commodity? It's very hard to put a number to that. If somebody can get a sale for, let's say, number two copper today for $1.05 to $1.15 under, if it was my business, I will take it. Why?
Yeah.
Because I'm trying to find liquidity in the market, right? Sometimes that is the best part about the market, that you can find a liquid partner that can pay for the load. And you guys and I know that anytime you look at it, the trade that you did the prior days, sometimes it looks better in paper and sometimes it doesn't. But it's better to be liquid at this point, and that's for the majority of the smaller people business, that should be priority number one, because if you can sell it, you can trade it, and you can turn it into cash, and you can just move on to the next deal. With
You make such a good point there. I'm glad you like went there, because I, I I think it's super important for guys to understand that, if your ability to be liquid and your ability to move the scrap gives you another chance at maybe buying it cheaper and making the next deal actually make money. But more importantly, I think it goes back to the quality of material that you produce as a business and what your reputation is staked on will also help you in these illiquid markets, correct? If you are known for making a quality number one and a quality number two, then I think that helps you in these tougher markets where buyers, buyers, they have their choice right now who to buy material from. And if they can buy from you and they know your quality is good versus over here and it's maybe suspect, you're going to get a shake at that. Do you want to speak to that a little bit?
Absolutely. I mean, listen, from the consumer standpoint, when you have your pickings, and they certainly have their pickings right now, they want to deal with the guy who has good quality that delivers on time. Okay. It's just the last thing a trader wants right now when they're a consumer is to deal with a bad quality load that is going to take their attention away from everything else that is going in the market. Right. So, it's really key for small producers to be nimble, to make those appointments, to deliver how they're supposed to deliver. If it's wooden pallets strapped to a peanut sack, that's how it should go, right?
Mhm.
It's not the time to play fancy footing with packaging or logistics or shipping dates. This is the time when traders, especially consumers, recognize, and also they will give first bids to those guys who have been consistently shipping good quality on time delivery through the years. Absolutely.
Yeah. Consistency in packaging, consistency in shipping, consistency in quality. And I think you hit on those. I think this is important. And I think people can get lost when the market is good and super liquid, and then just they could just be throwing shit together, right? And being, hey, nobody's gonna, and sometimes it doesn't matter. Sometimes there's buyers for everything at all times in all walks. But I think that what you bring up here, and I think what's important for people to remember is when it's really good out there, your reputation will precede you when it gets tough to sell material. And so think about that when you want to just slam some material out the door and you don't care about what people think about your product, because that is your reputation when times do get tough. And it'll be super important to you that you have quality product when the market does get a little bit challenging like it is today.
Yeah, I mean, on a limited market, because consumers are also dealing with their own book of business that are, fluctuating, and they're not buying as much as they used to, right? So, of course, that pecking order is going to get smaller. And those guys who are not known for shipping quality, who are not known for making the commitment on the delivery, are going to get last bids and sometimes not. And that's a secondary market that they want to try. But if you want to be a consumer, driven yard or delivery yard, you have to be able to make your commitments.
Makes sense. Do when you think about it moving forward, and I kind of cut you off, which is I sometimes will do that, but you were talking about the spreads on like number one, right, and number two, and you kind of gave a range, and I think what people don't understand, and Nick can attest to this, and I'll let him speak to it. When the COMEX goes to $5 or five twenty
Hmm.
eight or 530, there's becomes a little bit of anxiousness with the electricians and the plumbers, and because they're on the buy side, right? They're having to buy new
Yeah,
material against those prices. And then all of a sudden there's like, oh, well, this copper should be worth XYZ a pound, and you guys should be paying us XYZ a pound. And for the average person that doesn't deal with on the commodities end, we're just because COMEX is $5 doesn't mean that all of a sudden we are getting $5. And I think that that's, for the amateur people that say, listen to this podcast, I want those guys to understand that as well. Like we're going to move with the market, but it's, our spreads are significantly widening out to, let's say, like, for example, if you say $1.15 for number two copper today, just say $1.15 off of, let's say today it's
470.
472, right?
Yeah,
471 right now. I mean, that means your sell price, boxed, baled, delivered, is nowhere near
Well,
for 72, right? I mean, you're getting in the mid threes. And so when you see that price, and then in the recycling center, the scrap metal recycling company has to still make margin on that cash outlay. I mean, when you see a high $2 price or a $3 price for number two, that still doesn't leave a ton of room
no,
margin for
No.
packaging and shipping and inventory risk that you're taking. And so I just want to convey that, is those margins have to stay reasonable on both sides of it.
And
well,
that's the fight that we fight in our recycle centers or, on our commercial side. We deal with a lot of electricians, and those electricians would love to see COMEX go down to, 350. Like that's where they want it. They want it to stay somewhere consistent. They don't want a high copper number. And it depends on the size of that electrician, that company, on how they're buying their material, what size of bulk they're buying it in. But they're bidding projects, off of their copper price, and they obviously want the best scrap price they can get. They want as little as scrap as possible for their projects as well. And that's something with like a good recycler will help them kind of look at their numbers and they can compare it to their jobs. So that's important. But I've had to have that conversation with many people. It's like, yeah, you might see that copper price going crazy, but it's actually worth a little less to us now because the spreads have widened so much. And that's the honest truth to anyone that's in on it on our side of the game, you know, and just seeing also the increased volatility. Like, I don't know if I'm going to open my phone to it up 20 or down 30. I just don't know what it's going to be every day. So,
Aldo, what are you giving for advice to because you're dealing with guys like the size of our business, a little bit smaller, a little bit bigger. You're giving advice to people of various sizes in this industry, and on the consulting side and whatnot. What are you telling them moving forward on how to even buy? Because obviously you're helping them move their material. What are you giving them for advice on the buy side?
well, before I answer that, I always give that advice based on if it was my money, right? And
Yeah.
I always think about that, right? If it was my money, Aldo scrap, venture, I will buy as wide as I can, and I will sell as quickly as I buy it. I will play on my sales on smaller lots. I wouldn't be, trying to make 40,000 pounds. I would probably be selling smaller lots just because if you cut that time in between trading days, you're actually reducing the risk of, the fluctuating market from day to day. And tomorrow the market can look a lot better, but if you're liquid, to me, that's like a new set of cards that you get to play, right? You're not
Yeah.
holding on to the table, you're not holding on to the bed, you're not stressing out about trying to pick a number because quite frankly, there's no science to these, right? All you can do is try to buy it as wide as you can, sell it as quickly as you can, become liquid, get that cash, and go on to the next deal. It is extremely hard, even for guys that hedge, because most people think that hedging is like the answer to everything. But you're hedging the same index that is fluctuating all day long. And at some days, you have to go and pick a date and a time to pull on that hedge, which is, gives you some sense of protection, but it's not the answer to everything. And as you and I know, Brett and Nick, most guys who are dealing with a few loads are not, big enough to use a hedge book. So today, man, if you can hit those fundamentals, buy it as wide as you can, package it as quickly as you can, make good quality, sell it as quickly as you can, become liquid, move on to the next one. That would be my best advice.
That something I think about, and I got two questions off of that answer for you. Um, but something that I really push on our guys is when these markets are super volatile and the price of copper is up, I prioritize their production, right? I say we process, converters first, we process copper second, we process aluminum, then we process stainless, right? So I prioritize the processing on the volatility of the market and the value of the material, because it becomes a cash flow game. Anybody that's a small, medium-sized business, cash flow is your oxygen. That is what allows you to do what you do all day long. Especially when you're having to have big cash outlays to buy the next set of material coming through your door, right? So something to think about if you're, small, medium size is prioritize your production, not at what you have the most volume of, but what's going to return the cash the quickest, and then will allow you to then put that money back in your coffers to then, as Aldo says, get yourself a new set of trading cards for a new hand, right? If you can get that money back in, then you can then kind of facilitate the next, the next opportunity, or keep the lights on for another month, right?
Absolutely. I mean, think about, not to get fancy here, but your carrying cost of inventory for a small yard that buys, call it 500,000 pounds, right? If 100,000 pounds of that is copper, and you have $4+ into that, I mean, you might be holding, very well over $60,000-$70,000. But to your point, $40,000 of that can go up and down 10 cents if you don't get it out, right? So you got to prioritize, what's the biggest risk that you get out of the book and get it out as quickly as you can.
Absolutely. So the next question was hedging. You brought it up, hedging for copper. And so is there a sweet spot in there that you feel people should look at on a volume basis? Like, okay, I should start probably hedging if I'm doing XYZ amount of pounds or XYZ amount of dollars on a monthly basis. Um, do you like hedging? Is hedging a part of what you do? And just kind of give me like kind of that, your 2 cents on that, for say you're, small, medium-sized operators, or how important is hedging or not?
Well, it's very important, and I think that there's no one specific math rule that if you hit so many pounds you should be hedging. But roughly speaking, for people and yards that have 4 or 5 loads per month, right? Because keep in mind that intrinsic value of that, now you're talking 800,000, $1 million on rotating business, right?
Mm-hmm.
10% of that or 10 cents of that can be significantly for a business, right? So when it starts getting to that kind of number, people start looking into hedging mechanisms. Those guys that don't like the hedging because it can be a bit complicated and cost money, they just tend to be very sold back to back, and they, try to provide a natural hedge with their inventory to be able to do it. Hedge is a strategy, but it's not for everybody either, right? One, it costs money. The premium calls can be significant. You need a good person on the accounting side to be able to keep track of it. And you have to understand what the purpose of your hedging strategy is. If you're protecting margin, protecting sales, or just trying to protect the inventory fluctuation, there's all sorts of combinations that somebody can pick on.
Okay.
I got a question about, you mentioned how China's just been quiet. They're not consuming like they used to. Has there been any other countries, any other consumers of this material that's kind of been stepping in to buy some of it? Or is that, the problem that we're running into is there is no one stepping up to the plate?
Well, I mean, China as a consumer of the scrap is one of the largest, if not globally one, the largest, right?
Yeah. Yeah.
So, other countries that might benefit from these, Mexican standoff, I call it, between the United States and China right now, might be, places like, Hong Kong, Malaysia, Thailand, that can, make a semi-finished product and then ship into China. So I think that some of those markets eventually will step up. China right now is kind of aiming more aggressively to the Canadian market because there is no issue there, and the transit times are somewhat similar to ours. Europe, I think, is going to step up to the plate a little bit, but they are very demand-driven, less than speculation-driven, where I think that China tends to be a little bit more on the speculation-driven to a certain extent, and we're just not seeing one big country step into the market to fill that gap. I think it's going to be a series of companies into the market to fill that gap, but it's not going to be just one country.
Okay.
And what kind of timeline do you see? Because I mean, it feels like moves like that are not like an overnight switch, right? It feels like that's like a multiple months timeline before those other countries, or that material starts moving, flowing, a different direction.
I think we might have lost Aldo.
Okay. Is Aldo froze?
He's frozen.
All
I'm adding him back in.
Try that again.
right, you're back.
You're
So
back.
I was to your speaking about the other countries on a consumption basis. Do you see that happening over a month's time, a year's time, 6 months? Like, what does that look like as those other countries then begin to be, if China was consuming, I've seen anywhere from high 30s to low 40% of the world's copper markets, right? I mean, I think that number probably varies, depends on what publication you read. I mean, that doesn't just happen, doesn't just change and switch overnight. I think that takes time. And what's your 2 cents on that?
I think it takes time, and to your point, is not only the demand behind those markets, but also the infrastructure, right?
Yeah,
I mean, absorbing 20% of the global copper exports into any given market, how much infrastructure you will need to be able to absorb that. I mean, it's mind-boggling to just think about those kind of quantities, right? Because you will need so many furnaces, you will need so many forklift drivers, you'll need so many trucks. And you guys know that even with the best intention and the least amount of regulation, those are things that don't happen overnight. Uh,
yeah,
so that's kind of truly one of our biggest issues right now in the domestic market. That at least what's happening right now is that we're inundating the domestic market with all this supply, which is not meant to be oversupply at this point, because the capacity that they can produce has been around by the supply. So it's very interesting to see those dynamics right now. You will have people like Europe and other Asian countries step up to the plate, but if you're moving 20,000 gallons of water from one truck to the other one, and you need somebody to take 40% of that, you're going to be calling on a lot of people to be able to figure out who has the amount of containers that you need for that.
yeah. And so is that where you see, is that what has, in your opinion, caused the big spread between the COMEX and the LME? Is that what that is driving that? Or I mean, what do you see as the driver for that spread?
I think that there's two issues specific to COMEX that I see. COMEX itself is a reflection of supply and demand for guys that deal and trade like you guys, myself, and anybody else who is in this business, in the recycling business, right? So we are very uncertain about future demand, right? So for that reason, the spreads tend to widen. Now, why have they widened beyond significantly levels or historical levels? One is my personal opinion. I tend to contend that COMEX is now more a reflection of a financial market and less a reflection of a true consumer and producer market. And the reason I say that is because today there's these guys that we like to spend a bunch of time looking at numbers.
think that, oh, Tesla's going to make a bunch of cars and they're going to do solar panels, and you think you're really buying into a company um and the business that they're creating, when really you're just trading a financial instruments against whether people think that they're going to make robo taxis or the
Yes,
future of AI or a zillion cars. Like, you're just betting on, it's more not necessarily the business, but the sentiment of people against that stock or against that business. And essentially, COMEX has now become that versus just a way to trade and track and understand the movement of the actual commodity. And now
yes,
it's more of sentiment driven financial, financial investment houses driven, trying to
yes.
figure out, yeah, like where they think the future of copper should be if you have a need for 50 more data centers next year, right?
Yeah, and that is very hard to explain, right? Because Nate, good luck trying to explain that to an electrician that saw comics
I'm
rising
just
50.
gonna send him a link to this podcast.
And it doesn't matter what your level of expertise is on this market, right? I mean, this is seldom numbers that people look into or really try to understand, right?
Yeah.
I do it because I'm trying to understand what the sentiment of the market is, not as a way to project what COMEX is going to do or not. I'm just trying to understand, is the COMEX number that we see every day and we trade with every day, is it a reflection of supply and demand, or is it a reflection of financial movements on currency, on trade and taxes and all those things? Now, I can tell you that if 23, 25% of that trade is fundamentally speaking supply and demand, and the rest to a certain extent is not. So the question is, right? I mean, is COMEX now a reflection more of a financial driven market and much less of a supply and demand basis market?
Although,
I
what
think
was the traditional spread between the LME and the COMEX? Like, it's so wide right now, but what was it traditionally before we saw this?
Well, it has changed, and believe it or not, at some point a few years ago, LME was actually higher than COMEX,
yeah.
right? But fundamentally speaking, you have more financial homes being participants on the COMEX trading because, quite frankly, it doesn't take that much money. If you want to register your company to trade on COMEX, there are certain legal protocols that you got to do. But think about it: the COMEX contract is 22,500 pounds. You guys are selling more pounds of copper, actually trading more pounds of copper on one container than the contract average on the COMEX. LME, in the other hand, you have to have a larger collateral, and you have to have a seat on the circle to be able to trade the commodity. So it's a lot more restricted, and that's why you have, that answers why some of these fluctuations are a lot less on COMEX than what we see they're a lot less on LME than you see on COMEX.
I think it goes back to, I think the big takeaways I get from this conversation is, um, your product is only worth what somebody's willing to pay for it, right? I mean, regardless of what the COMEX says, regardless of what LME says, and I always say this to my son. He goes, "Oh, these shoes are worth this much, and these shoes are worth." He really is into buying and selling and trading shoes. And I said, "Oh," and he goes, "Yeah, these shoes are worth 200, and those are worth 300." And I said, the only reason, or the only way that those shoes are worth 200, if a guy sends you $200 for that pair of shoes. I said, until then, you're just guessing. And I go, and our business is no different. Like, we're trying to use the COMEX, we're trying to use LME, we're trying to listen to podcasts, we're trying to read and interpret. But at the end of the day, our scrap is only worth what somebody's willing to pay. And at the end of the day, if we don't make good scrap, if we don't make quality, and we don't deliver on time, and we don't have consistency, then your scrap is worth less, regardless of what the COMEX says, and regardless of what, whatever. And if there's less buyers, they're going to be picky. So you're going to have to be very process quality driven. And also, I think one thing that gets lost in this, and I want you to speak to this, is I've talked to more than a few people that were like, that got burned at one point or another, and then somebody's came back to the table and said, hey, I really, I want to, do business again. But it's too late at that point. They've already burned that bridge, and they burned it for an extra 5 cents when the market was good, right? Or an extra 2 cents or whatever. And then they sold it to somebody else so they could get a little bit more money. I just want people to remember in our industry, it's it's a very small world. People know and they talk to each other, and it's super important to have those relationships with businesses and consumers and suppliers that are doing the right thing, that they're gonna deliver, they're gonna send you quality product, and they're not gonna sell you out for a 2 cents or 5 cents. But this is kind of your wheelhouse, right? This is kind of where I think you shine for your customers, for the people you're dealing with. So kind of speak to that relationship part and kind of, how you can help bridge that gap.
I'm going to choose my word carefully here to not say that the index is not that it doesn't matter. But
Yeah.
here's the extent of this, right? At the end of the day, what you're trying to find is a liquid partner that is willing to hold the end of a contract and be able to pay you on that. Fundamentally speaking, that's trading 101. We're trying to find that liquid person that is willing to write a check for that. To your point, what is that material worth? Indexes are reference numbers that we try to make sense of that are driving us nuts. That to a certain extent, day to day, sometimes make very little difference, right? I was telling you guys before we started this that I got into a United flight and they're offering those credit card deals, and you look at it and you're like, oh, 180,000 miles. You're like, oh my god, like, and then you look at the fine print and it's like it takes you to Omaha, Nebraska, and nothing else, right? So what is the true value of those miles? I mean, it's certainly just like the index, right? I mean, we can be 470 today. Where really are you getting paid is that spread and that liquidity, right? And people sometimes spend too much time thinking about what these markets are doing day to day. I was having a conversation with somebody the other day, and to me, fundamentally, is buy as well as you can, process as quickly as you can, sell as quickly as you can. Here's the reason why. April, we have had 14 trading days so far. 6 of those days, the market went negative. 8 of those days, the market went positive. Almost a 50-50 split, just kind of like toss of the coin 50-50 split. But think about this. If you add all the negative numbers, which is what happened 6 different times, is $41,000 in negatives. If you add all the positives, which is actually more than negative days, it's only $27,000. Okay? And that's with a 50-50 split roughly. So the odds of us getting it wrong are pretty like 50%,
Yeah.
So don't spend too much time trying to time that and concentrate on being liquid, having a good quality, finding a good partner that you can deal with, especially on these times. You remember the guy who, held his back, his end of the bargain. Some contracts are look upside down, and you can always reach out to that person and say, hey, I know this is not the most ideal contract for you. Hey, how can we work on this one going forward? Right?
Yeah. No, that's a great point, and I think that's something I want. I mean, this podcast really is built for the small medium sized guy and the small medium sized operators, and that's what we really want to try and give them the best advice that we can. Just say, hey, especially if you're new in this business, is your reputation will precede you, even if you've only been here for a year or 5 or 10. I mean, people know like if you're worth trading with, if you're worth if you can deliver what you say you can at the quality you say you're going to deliver at the volume you say. And it's what you do. I think my biggest thing I want people to understand, it's what you do in the good times that sets you up for the tough times. It's how you treat people when the market is hot and everybody wants your stuff, and you're the guy with the volume, and you're the guy that can make it happen. That if you do it right, most of those people will still exist when the market is you may not like the spread, you may not like the margin, but you at least have a home for your material, right? But if you screw people when the market's hot and next guy offers you 5 more cents, and the next guy offers you 5 more cents, and you leave this guy hanging and you just chase and you just chase and you just chase, when that thing circles back around and you're sitting there and nobody wants to do business, or they're going to buy from somebody else because they would rather buy from them than you, then you're going to be in a tough spot. And I think that,
So to
you
a
know, I
certain
think that
extent, Brett, you think loyalty still matters. Obviously, quality matters, and relationships still matter. It's not just numbers, and that's what I love about this industry. At least that
yes. The
I've
trade, the
matter.
trade is those things. The trade is not just a commodities, it's still a relationship business. It's still a how you treat people business. And I think that that's super important, regardless of the commodity. All those here are breaking down copper, but I think that ultimately, I think what reason he can do that is because he has relationships on other commodities and with other businesses. And I think that relationships still matter. You know, AI hasn't taken over the copper trade yet, but I'm
I,
gonna give, I will give Aldo the last words here on the podcast is kind of what you see of the future. What do you think about the copper market? And then at the very end, like kind of let us know how people can get a hold of you.
Listen, globally, we still need tons and tons of copper. Domestically, in the export market, it's still going to be a very fluid commodity. I think that it's going to be very interesting to follow these changes on trade and economics here in the domestic side. It can definitely impact how and when we do things significantly. There is no formula for protection against this. And when things are like this, you go back to really hitting your fundamentals. Buy it as wide as you can, process as quickly as you can, sell it as quickly as you can, and deliver a good quality product with a liquid partner. That's if you consistently are able to hit on those things, you're going to be safe. Although you're not going to hit all the home runs, and you're not going to get hit by all the bad markets either.
There's a time to hit singles, right?
Listen,
Singles and get hit by the pitch, get on base. Like there's a time in this sport of trading is to just singles and doubles.
Billy Bean of the Oakland A's made a fortune of inventing just getting on base, man. That's
Yeah,
all you
yeah,
got. That's all you got to do, man. Just get on
yeah.
base, okay?
Money ball, money ball. All right,
And
Aldo, how does if
Thank
somebody
you.
wants to pick your brain and somebody wants some help, how do they get a hold of you?
appreciate it, guys. They can reach out at themetasagency.com. We just actually relaunched our new website, and we are also representing consumers on the copper side in Europe, of course. So we have a liquid partner that we buy on their behalf. And we also doing the consulting part, helping some small operators with their sales and marketing functions as well.
Awesome.
All
Yeah.
Well,
right,
thank you
thank
for your
you.
time, man. I always appreciate talking to you. You always bring a good you always bring a smile and you always bring good information, so I can appreciate that.
Thank you, guys. Appreciate it.
Thank you, Aldo. Thank you, Brett.
All right, take care, fellas.